Every single day, more than 4 million Americans wake up behind bars, on probation, or under some form of correctional supervision. Most people see prison as a place of punishment. Politicians see it as part of the justice system. Families see it as a tragedy. But investors? They often see something completely different. A business. Now, before you judge that idea, let me ask you a question. What if I told you that every occupied prison bed can generate thousands of dollars in government payments every single year? What if I told you that some companies don't just build prisons, they operate them for profit? Welcome to one of America's most controversial industries, an industry worth billions of dollars, where government contracts, real estate, logistics, healthcare, and finance all come together behind concrete walls and razor wire. So, you want to own a prison? At first, that sounds ridiculous. Why would anyone want to own a prison? But that's because most people never stop to ask how prisons actually work. In the United States, there are more than 1.8 million people incarcerated in federal, state, and local facilities on any given day, making the country home to one of the largest correctional systems in the world. Every inmate needs food, health care, security, transportation, utilities, maintenance, and countless other services every single day. None of those services are free. Someone has to provide them. Someone has to manage them. And in many cases, someone gets paid to do it. The result is an industry that moves billions of taxpayer dollars every year, an industry that most Americans rarely think about unless they're directly affected by it. But here's where things get really interesting. Not every prison in America is operated by the government. Over the past few decades, a number of correctional facilities have been managed by private companies under long-term government contracts. Instead of manufacturing products or selling software, these businesses generate revenue by operating correctional facilities and providing services that governments outsource. That single idea has sparked decades of debate. Supporters argue that private companies can reduce costs and improve efficiency. Critics argue that profit should never be connected to incarceration. And that's exactly why this industry sits at the intersection of business, politics, ethics, and public policy. Before you decide whether owning a prison sounds like a brilliant investment or a terrible idea, you first need to understand how the money actually flows. Because once you follow the money, you'll realize this business is far more complex than most people ever imagine. Most people assume prison companies make money by simply locking people up. That's not how the business works. Governments don't pay private prison companies for sending people to prison. They pay them to manage correctional facilities. In other words, the customer isn't the inmate, it's the government. State governments, federal agencies, and immigration authorities sign contracts with private operators to house inmates, provide security, maintain facilities, serve meals, deliver health care, and handle day-to-day prison operations. Depending on the contract, companies may receive a fixed annual payment, a per-bed payment, or a per-inmate daily rate. In some cases, that daily payment can range from $60 to well over $150 per inmate, depending on the security level, health care requirements, and the specific services included in the agreement. Suddenly, you're no longer looking at a prison. You're looking at a highly specialized government services business. But here's the part most people never think about. Imagine a correctional facility with 2,000 inmates and an average government payment of $100 per inmate per day. That single prison could generate around $200,000 every day, or more than $70 million a year in revenue before expenses. Of course, running a prison is incredibly expensive. Security officers, surveillance systems, utilities, inmate meals, medical staff, maintenance crews, insurance, transportation, and legal compliance all cost millions of dollars annually. That's why the companies operating these facilities aren't trying to maximize the number of prisoners. They're trying to manage costs while meeting strict contractual and regulatory requirements. Just like an airline manages seats or a hotel manages rooms, a correctional operator manages secure housing capacity. The economics may be different, but the business principle is surprisingly familiar. Now here's where things become even more fascinating. Not every prison contract is the same. Some facilities house state prisoners, others serve the Federal Bureau of Prisons, while many are operated under contracts with U.S. Immigration and Customs Enforcement, ICE, or the U.S. Marshals Service. Each customer has different standards, different payment structures, and different performance requirements. Lose a government contract, and millions of dollars in annual revenue can disappear almost overnight. Win a new long-term contract, and a company's financial outlook can change dramatically. That's why, in this industry, the most valuable asset isn't the prison building itself. It's the government contract behind it. And once you understand that, another question naturally follows. Who are the companies that have turned these contracts into billion-dollar businesses? The answer begins with two names that dominate the private prison industry: CoreCivic and the GEO Group. These aren't small regional companies operating a handful of facilities. They're publicly traded corporations that have spent decades building relationships with federal and state agencies across the United States. Together, they manage correctional facilities, detention centers, re-entry programs, and electronic monitoring services for thousands of individuals. At various points in their history, each company has generated billions of dollars in annual revenue, proving that this isn't just a niche business. It's a major government outsourcing industry. But here's what's fascinating. Neither company describes itself as a prison company. Instead, they present themselves as government solutions providers, offering secure facilities, rehabilitation programs, transportation, healthcare coordination, and community supervision services. That distinction is more important than it sounds, because the smartest companies understand they're not really selling prison cells, they're selling operational expertise. Governments don't hire them because they own buildings. They hire them because they can recruit staff, manage security, maintain facilities, deliver health care, provide food services, comply with strict regulations, and operate complex correctional systems around the clock. In many ways, it's similar to how airports hire private security contractors or cities outsource waste collection. The customer isn't paying for concrete walls, they're paying for reliable operations. And when contracts last 5, 10, or even 20 years, they can provide companies with relatively predictable revenue streams, something investors generally value. But here's where the story takes a dramatic turn. Unlike most industries, success in the private prison business isn't driven only by efficiency or profitability. Politics can change everything overnight. A single election, a new governor, a presidential executive order, or a shift in criminal justice policy can dramatically impact demand for private prison services. Over the past decade, several states have reduced their reliance on private prisons, while immigration detention policies have caused demand to rise or fall depending on the administration in power. Imagine running a billion-dollar company where your biggest risk isn't your competitor. It's Washington, D.C. That's why investors don't just study financial statements. They watch elections, legislation, and government policy just as closely. And once you realize that, you begin to understand why this industry is considered one of the most politically sensitive businesses in America. But if operating prisons isn't the whole story, where does the real money actually come from? Surprisingly, it doesn't come from prison cells alone. The largest correctional companies have spent years expanding far beyond traditional prisons. Today, many generate revenue from immigration detention centers, prisoner transportation, electronic monitoring, residential re-entry facilities, rehabilitation programs, and community supervision services. In other words, they're no longer just operating prisons, they're building an entire corrections ecosystem. One of the fastest-growing segments has been electronic monitoring, where individuals wear GPS ankle devices instead of remaining behind bars. Governments pay private companies to monitor thousands of people remotely, creating a business that's often less expensive than incarceration while still generating recurring revenue. It's a perfect example of how an industry evolves when public policy changes. Healthcare is another major piece of the puzzle. Every correctional facility is legally required to provide medical care to inmates, making healthcare one of the largest operating expenses and one of the most carefully managed parts of the business. Add food services, mental health programs, educational courses, vocational training, facility maintenance, laundry, transportation, utilities, and advanced security technology, and you're no longer looking at a simple prison. You're looking at an operation that functions like a small city running 24 hours a day, 365 days a year. Every meal served, every camera monitored, every medical appointment scheduled, and every transportation movement has a cost attached to it. Managing those costs efficiently is often the difference between a profitable contract and a losing one. And that's exactly why this industry attracts both investors and critics at the same time. Supporters argue that private operators can deliver these services more efficiently than governments, potentially saving taxpayers money. Critics argue that when a company's revenue depends on government correctional contracts, it creates uncomfortable questions about incentives, accountability, and public policy. It's a debate that has lasted for decades, and it isn't going away anytime soon. But regardless of where you stand politically, one fact is impossible to ignore. This industry moves billions of dollars every year. Which leads to the biggest question of all. If the money is real, why have so many major investors and financial institutions become increasingly cautious about the private prison business over the last decade? The answer has very little to do with profits, and almost everything to do with politics, public opinion, and reputation. Unlike most industries, a private prison company doesn't just answer to shareholders. It also answers to lawmakers, government agencies, advocacy groups, the media, and ultimately, the voting public. Over the past decade, several large banks and institutional investors announced they would reduce or end financing for private prison operators, while some states chose to phase out or reduce their use of privately managed correctional facilities. At the same time, other government agencies continued awarding contracts for detention, transportation, and community supervision services. That means the industry's future isn't determined only by financial performance. It can also change with elections, legislation, and public policy. This creates a level of uncertainty that many businesses never have to deal with. Imagine running a billion-dollar company where one new law, one executive order, or one major policy shift could dramatically change future revenue. That's exactly why investors who follow companies like CoreCivic and the GEO Group don't just read quarterly earnings reports. They also pay close attention to congressional debates, immigration policy, criminal justice reform, and state budgets. In this business, understanding politics can be just as important as understanding finance. A company might improve its operations, lower costs, and win new contracts, yet still see its stock price fluctuate because investors are reacting to political headlines rather than business fundamentals. And that's what makes the private prison industry one of the most unusual businesses in America. It's not just a real estate business. It's not just a government contractor. And it's certainly not just a corrections business. It's a company whose success depends on government relationships, regulatory stability, operational efficiency, and public trust, all at the same time. That's a combination very few industries have to manage. Which brings us to the most important question of all. If this business carries so much political and reputational risk, why do some investors still believe it deserves a place in their portfolio? The answer has less to do with emotion and everything to do with how professional investors evaluate risk versus reward. Great investors rarely ask, "Is this business controversial?" They ask a different question. Can this business continue generating cash flow over the next 10, 20, or even 30 years? That's the lens through which Wall Street evaluates the private prison industry. Companies like CoreCivic and the GEO Group own billions of dollars worth of correctional facilities and real estate. Even when individual contracts expire, those assets can often be repurposed for detention centers, re-entry facilities, government offices, or other institutional uses. In other words, investors aren't just buying prison companies, they're buying real estate, long-term government contracts, and infrastructure assets that have taken decades to build. But that doesn't automatically make them great investments. Every business has trade-offs. Technology companies may grow faster, but they're constantly fighting innovation and competition. Retail companies struggle with changing consumer behavior. Airlines battle fuel prices and economic downturns. Private prison companies face a different challenge: political risk. That's why many professional investors demand a higher potential return before investing in these businesses. Higher risk often requires higher expected rewards. Some investors avoid the sector entirely because of ethical concerns. Others see an undervalued industry with stable government-backed revenue. Neither perspective is inherently right or wrong. It simply depends on an investor's goals, risk tolerance, and personal values. That's exactly what makes the industry so fascinating. Two intelligent investors can look at the same company and reach completely different conclusions. And perhaps that's the biggest lesson hidden inside this entire story. A great business isn't always a great investment. Those are two completely different questions. A company can have solid operations, experienced management, and billions in annual revenue, yet still become a poor investment if the risks outweigh the potential returns. That's why successful investors never stop at the headline. They study contracts, regulations, political trends, debt levels, cash flow, and management quality before making a decision. Which brings us to the final question. After everything you've learned today, if someone offered you the opportunity to own a private prison company, would you take it? Or would you walk away? Before you answer, there's one final lesson that every entrepreneur and every investor should hear. The biggest mistake people make when analyzing the prison business is focusing on who the prisoners are instead of how the business actually works. Successful investors don't invest based on headlines. They invest based on business models. They ask questions like, is the revenue predictable? Are the contracts long-term? Does the company generate positive cash flow? How much debt does it carry? Can management survive changes in government policy? Those are the questions that determine whether a business creates wealth over time. Because at the end of the day, the market doesn't reward opinions. It rewards companies that can consistently execute under pressure. That's why the private prison industry teaches a lesson that extends far beyond corrections. The most valuable businesses often solve problems most people don't want to think about. Waste management handles garbage. Insurance companies profit from risk. Funeral homes serve families during loss. And correctional companies manage one of the most complex responsibilities in society: public safety and incarceration. None of these industries are glamorous, yet many have generated billions of dollars in revenue over decades. The common denominator isn't excitement. It's essential services. Businesses that provide services, governments and communities cannot easily live without often survive much longer than businesses built around temporary trends or consumer fads. So, would I personally buy a private prison company? My answer is simple. I would never make that decision based on emotion or on profit alone. I would study the contracts, the balance sheet, occupancy trends, political exposure, debt, management quality, and the company's ability to adapt to changing laws. Because buying a stock is easy. Understanding the business behind that stock is the hard part. And that's exactly what separates successful investors from everyone else. But after everything we've uncovered, one final perspective changes the entire story. It has nothing to do with prisons, and everything to do with how the world's smartest entrepreneurs recognize opportunity where everyone else only sees controversy. Most people look at a prison and see crime. A politician sees public policy. A correctional officer sees responsibility. A prisoner sees confinement. But an investor sees something entirely different: a business model. They see government contracts, infrastructure, recurring cash flow, long-term real estate assets, operational efficiency, and risk management. That doesn't automatically make the business good or bad. It simply means they're looking at it through a different lens, and that's one of the most important lessons in business. Every industry looks different depending on who's looking at it. The world's best entrepreneurs don't become successful because they follow popular opinions. They become successful because they understand how businesses actually work beneath the surface. So, you want to own a prison? If your answer is yes, simply because you heard it's a multi-billion-dollar industry, then you've completely missed the point. But if your answer is yes, because you've learned how government contracting works, how recurring revenue is created, how political risk affects valuation, and why long-term cash flow matters more than short-term headlines, then you've taken away the real lesson from this video. This isn't just a story about prisons. It's a masterclass in understanding business models, risk, incentives, and the hidden mechanics of industries most people never stop to analyze. Whether you agree with private prisons or oppose them, understanding how the industry operates is very different from deciding whether you support it. And perhaps that's the biggest takeaway from today's story. The most successful investors don't chase businesses that everyone is talking about. They study businesses that almost nobody understands. Sometimes those businesses are exciting, sometimes they're uncomfortable. But the numbers don't care about emotions, and great investors know that every opportunity comes with both rewards and risks. The goal isn't to ignore the risks, it's to understand them before making a decision. The next time you drive past a prison, don't just see concrete walls, barbed wire, and guard towers. See billions of dollars in infrastructure, decades of government contracts, one of the most politically debated industries in America, and a business model that continues to divide investors, lawmakers, and the public alike. Because in the world of business, the most fascinating industries are often the ones hidden in plain sight. If you enjoyed this deep dive into one of America's most controversial business models, make sure to subscribe to Money Blueprint. We uncover the hidden economics behind industries, companies, and business models that shape the American economy. So you don't just learn where money is made, you learn how money actually works.